Yeah, that quarter ended at the end of January. I mean, to your point, you just said, is Q1 sort of a mulligan for a lot of companies reporting? And so, why was this important? We know the dollar strengthened over the last few months. We know that Cisco is a company that has 40% of their sales outside of the U.S., so they're exposed to a lot of places where that dollar can kind of hurt them. The trade tariffs, obviously, with China, and then this coronavirus. So, listen, I think last quarter CEO Chuck Robbins said that it's a very uncertain time. I think he's kind of continued that thought process, but it doesn't seem worse than it was 3 months ago in November. So the stock just ran from 46 to 50 today. It's giving some of that back. The options market was implying about a 5% move in either direction. These are important to remember. In August when they reported, in November when they reported, they guided down. So here they are guiding for this current quarter, kind of in line, but it's important to remember that they're expecting sales to be down 3.5% at the midpoint or so, or 2.5% or so. That's just not great, and that's not in this market. You're not going to get rewarded for that. This is a stock trading 15 times, well below the S&P at 19 times, well below a lot of its mega cap tech peers. I just don't see why you step in and buy this thing here, given the uncertainty.
It seems like it's cheap at 15 times, but you have really no EPS growth, and the guide wasn't great. I mean, the quarter was fine, the guide wasn't great. And to Dan's point, we went from basically 43.5, 44 mid-December to current levels. This is where, by the way, we topped out at back in October, if you go back and look. So I think this probably retests, given a benign tape, which clearly we haven't seen. Benign tape, this retests the December lows, in my opinion.
I've been pretty constructive on Cisco. Also, I think the valuation is interesting, and I can't change that today. I was reading a Cowen report where they highlighted an interview with Chuck Robbins from Davos, where he basically said we're not seeing any change in end demand. In other words, it's not getting a whole lot better. I think the expectations were out there that this wasn't really extraordinary. And back to our conversation on, obviously, the look into the snapshot of where enterprise is right now. It's not getting a whole lot better. I mean, their service provider kind of routing business is something that you want to see pick up, but it was not something that was a big stalwart. I still think that Cisco's exposure to software and services, especially around security, are why you get margin improvement in this company, and I think it is attractive.